Back to our top story. U.S. futures reversing course following yesterday's sell-off. We're expecting a higher opening from the broader averages, although we are off of the highest levels of the morning. My next guest, with more than $22 billion in assets under management, says stocks are poised for a recovery into year-end, and there are plenty of opportunities to make a profit. Joining us right now is Alger CEO and Chief Investment Officer Dan Chung. Dan, good to see you again.
Thank you.
Thanks so much for joining us. First, giving the backdrop to investing, we know that the Federal Reserve left interest rates unchanged last week. Does that give you pause in terms of the backdrop for investing because the economy perhaps is not as strong as we thought?
So for us, it was actually the team of Alger Analyst was sort of excited. We have a little bit more time to assess where are the best opportunities in this market. The no action is going to, I think, prolong the uncertainty, volatility, probably to the slight downside. But we think it ultimately is an opportunity for stock pickers to get some really good bargains in this market.
So uncertainty going into the rest of the year means volatility, means, as you said, downside. Are you going to be buying into that downside, or you want to find a place where you feel like, okay, now it's a good opportunity because we've bottomed out?
Well, our process is definitely always looking for opportunity in the market, and I would say we're sort of already beginning to pick away at what we think are opportunities. The markets already are down from their highs. A lot of individual stocks are down quite a bit more. And, of course, the Fed's meeting in October, not very far away. And, Williams, president of the San Francisco Fed, was already hinting that, probably something happens in October.
Yeah, he came on my show actually Sunday. And I said to him, Anastasia, look, should we expect December as the time because you don't have a press conference in October? He said, we don't need a press conference. So I agree. I think it's October. What do you think?
I think it might be past October. I think I would fall in the December camp. And the reason I say that is because the Fed was pretty adamant about its concern about China. And if we judge from the manufacturing number that came out this morning, we may not get clarity on China until sometime later in the year. So I think this idea that U.S. can decouple from the rest of the world and the U.S. can decouple from China, I think that's kind of a mistake to make that notion, because if you look at emerging markets as percentage of global GDP, they're now 40%. They used to be 17% a couple of decades ago. So I don't think we can fully decouple. And I think for that reason, the Fed may actually want to see what happens between now and December. Between now and October, we're not going to get a whole lot more.
Isn't that true, though? Because when you look at our trading partners, there's so much challenge out there. Canada is in recession. Japan in and out of recession. Australia in recession. Can the U.S. sustain growth? And I'm talking corporate earnings growth as well, while our trading partners are so challenged?
Well, I think one of the most important things to note about, for example, the S&P 500 earnings is that although year-to-date it's essentially flat and well below what analysts expected at the beginning of the year, a large part of that is driven by the earnings from the energy sector, which have totally collapsed. If you take out the energy sector and in addition, if you take out foreign exchange effects, to us, our analysis is that core earnings growth looks like well above 6%. So the U.S. is actually on a slow but steady recovery. Corporate profits remain quite strong in our view.
Well, Dan, what's a new name you've added to the portfolio recently? Give us one idea, or even like where are you looking? You said this gives you more time to look into ideas. Where are you looking, or what have you added? Well,
we think there's three sectors in the U.S. that are really vibrant, global leading, and innovative, and that's technology, healthcare, and then most recently, I think, because of the improved economic conditions in the last couple of years, is consumer, obviously a very large part of the U.S. Economy. So we've been looking at all three of those sectors for opportunities.
Well, the consumer is really critical because, we still have yet to see the savings that consumers have gotten from the energy story, saving money at the gas pump, and we haven't really seen them put that money into the economy yet.
It's the anxiety that this volatile market continues to cause anxiety amongst investors, amongst retirees that continue to see their portfolios go up and down. Not a time where people are going to be out spending lots of money, even if the economy is improving a little bit. Americans aren't feeling it.
Yeah, but you think that will happen at end of the year, that consumers will put their money back, and it will be consumer-led?
I think so, yes.
Yeah.
I think Dan is right that if you are going to put money to work, you've got to do it selectively here, because on the surface, right, I mean, there's a lot of detractors from the S&P 500 earnings. There's the FX, there's the energy. You can't ignore it. You can extrapolate all you want, but if you're investing in the S&P in aggregate, you're still getting all that exposure. So I think sector-based, stock-based is the way to do it.
All right, we'll leave it there. Dan, good to have you on the show today.
Thank you.
Thank you so much. Dan Chung is the Alger CEO and Chief Investment Officer with more than $22 billion AUM.